Hi, my name is Breanna Barrier, and I did my report on how D.B. Cooper could have gotten away with extorting $200,000 from Northwest Orient Airlines. On November 24, 1971, a man who became known as D.B. Cooper purchased a ticket and boarded a Northwest Orient Airlines flight in Portland, Oregon, traveling to Seattle, Washington. According to the FBI, Cooper hijacked the plane just before reaching Seattle. Northwest Orient Airlines paid him $200,000 in ransom money. The serial numbers on the bills were recorded so they could be traced when spent. The hijacked plane then left Seattle en route to Reno, Nevada. Cooper parachuted out of the plane during this flight and was never found. An 8-year-old boy found the only trace of Cooper in 1980, a tie and $5,800 of ransom money. Did Cooper successfully steal the money and live on it, or did he die in the jump? Realistically, Cooper probably didn't survive because the odds were against him, odds like bad weather and inexperience. However, there was a mimic who recreated the jump that Cooper probably made, and he survived. So, if like the mimic, Cooper survived the jump, he would have been sure to have been caught by now, right? The serial numbers on the bills would have been a red flag if he spent the money, or if he deposited it into a bank anywhere in the United States. That is where things get interesting. Any thief who wants to live in the United States, after extorting the equivalent of over $1 million in today's currency, would have had to have had a plan. He wouldn't have been able to live in the United States right after the crime was committed, but by laundering money through another country, using foreign bank accounts, establishing a legitimate business in the United States owned by a trust, Cooper could have established a comfortable life for himself while his Al Capone-esque company allowed Cooper to live a free life. Before Cooper hijacked the plane, he would have needed to have opened a personal bank account in Canada and put enough money in it to cover living expenses in Canada for a couple of months. Once parachuting out of the airplane and surviving, Cooper could have fled north to Canada. The American government was tracking serial numbers on the ransom money. However, in Canada, Cooper could have exchanged the money into Canadian currency. From this point, Cooper could live off the money in his initial account. With the remaining $194,200, after losing the $5,800 of ransom money, which Cooper in his mind could have attributed as cost of goods, Cooper would have opened 3 or 4 bank accounts in Canada, depositing the money, now in Canadian currency, into each of these accounts. After establishing the accounts, Cooper could return to the United States and maintain residency in a state, let's call it Colorado, that allows one member on the board of directors of a company. Cooper could establish a life for himself, make friends, gain a reputation. This could take as little as a few months. Now, Cooper could decide he wants to open a business. He opens a trust and convinces one of his new friends in Colorado to be the trustee and the president on the board of directors of the company he plans to start. In all reality, this friend really would not have to do anything for the business. All that would have to be done for this to be accepted as legitimate by the government is for the business to file a report with the Secretary of State every year, maintaining that the company has a president on the board of directors. Next, Cooper would establish a business owned by the trust. The purpose of the trust is so that the wealth of the company isn't going to be attributed to Cooper. Cooper could be a bum for all the government knows or cares based on his personal financial standing. Cooper would hire an accounting firm to be responsible for the company finances. Another level of division from Cooper and the money so that the money can't be traced to a particular person who is spending it. This would act as an internal control so that the government would not get suspicious that someone was laundering money from this company. After establishing a number of bank accounts in Canada, starting a business owned by a trust with a trustee other than himself, with a president of the board of directors other than himself, and hiring an accounting firm to maintain control of the company's funds, Cooper can start his business offering his services as a consultant. Cooper would not have found having a business selling merchandise to be very practical. There would be too many false items to track and too many false documents to forge. Trying to falsify merchandise inventory bought from a wholesaler, fake or real, would require way too many trails to cover with false accounting documents. In order to maintain a merchandising company, Cooper would have had to worry about forging shipping receipts, paying sales taxes, credit accounts, and recording costs of goods and services when he didn't really have any. Maintaining a false company as a consultant to people or companies in Canada makes documentation much less suspicious because there are fewer accounting records and documents to organize and maintain. Much like Al Capone, Cooper would have to start some sort of business. Al Capone had parking garages where his buddies and him would add money to so that the money would be difficult to trace. It's very difficult to keep track of how many people actually park in a parking garage. So when maybe $2,000 worth of people parked in the parking garage, they could add $8,000 and pretend that $10,000 worth of people parked in the parking garage. This is how Al Capone got away with his money laundering for so long. Cooper wasn't in the mafia, and this version of him wouldn't be operating those parking garages that were an easy way to launder money at the time, but he could have created several fake companies that he was a consultant for. Basically, Cooper would start doing business as a consultant, contracting out to a few companies or people in Canada. Those companies would pay Cooper by wire to the trust-owned company bank account in Colorado. Those companies are actually the bank accounts Cooper established in Canada, and the money is the stolen money being wired in US dollars to Cooper's United States account. Now, the money has not only been laundered into foreign currency, but the currency Cooper got from Canada is in a bank or back in circulation, and he is getting new US dollars in his account that are completely untraceable to any real source. This money, however, for personal use because it's the business's money, and the business is owned by the trust. How is Cooper going to get a hold of that money for his living expenses or for his extremely stylish disco pants? Cooper would have needed to set up corporate accounts at the stores he frequented, the grocery store, appliance stores, that kind of thing. This would maintain his ability to buy on credit at these stores. Anytime Cooper bought at these stores, the balance on the accounting books would go under accounts payable. Once they recorded these entries, they would be expenses, such as a food expense at the grocery store, equipment expense at the appliance store, and so on. Weekly or monthly, Cooper could receive invoices from the stores for the balance due on these corporate accounts. Cooper would bring the invoices into the accounting firm, and they would write checks to the companies, which would debit the payable accounts and credit the expense accounts. Cooper could have bought any of these things without the purchase being attributed directly to him, only to the company. It might seem suspicious, however, that a company has a corporate account at a disco store. How might Cooper buy his disco pants without a corporate account? Well, the corporate account isn't the only way that Cooper would have to spend the money. The accounting firm would set up a petty cash account so that Cooper could withdraw a reasonable sum for whatever use. If Cooper wanted to purchase disco pants and disco outfit accessories, he would withdraw the appropriate amount of cash from the petty cash account and make those purchases. At the end of the year, the company would have to file taxes. Because Cooper wanted to come back and live in the United States instead of disappearing to an obscure country to live out his days, he realized he would be losing some of the money that he extorted to the government in the form of taxes. The company would write off all the expenses, however. Cooper's life was essentially tax deductible. When the accounting firm gathered all the financial information from the year, they would have to review the ledgers. Cooper didn't make physical sales, and the only thing that he would have needed to be recorded is the cost of services provided, which really is zero. What accounts might be receivable? Having accounts receivable at the end of the year may make the company seem more realistic than perfect accounts ending every year. The accounting firm would have recorded accounts payable, debits, and credits for the corporate accounts. There would be utilities expenses, food expenses, accounting firm salary expenses, and some other things that would need to be recorded. The temporary accounts would be closed out into the income statement and balanced out and recorded in the company's balance sheet. If Cooper could pass off the fake company to the government, there are few to no traces that the FBI could follow to track down their guy. It is possible that D.B. Cooper survived his dare and jump out of the hijacked airplane in 1971. If he wanted to live in America and not escape to another country, Cooper could have laundered his American bills into Canadian currency, established Canadian bank accounts, and started a fake business in the United States selling his services to Canadian clients. By having so many layers separating the original extorted money from him, Cooper could have successfully maintained a life out in the open. Perhaps the tie-in $5,800 left behind, if Cooper escaped, was a message to the FBI saying, "I am free. I dare you to track me." Additional information for the inquiring mind. D.B. Cooper was already a thief. Establishing a business trust would not have weighed on his conscience. Here is a link to learn more about business trusts. Also, if you'd like more information on money laundering, which the IRS takes very seriously, here's a little more information provided by the IRS on this issue. I hope you learned a little bit from my report. Thanks.